I'm Jason Spitzer. Welcome to October's edition of Real Talk. As you may have noticed, for the regular subscribers, we took a little bit of a hiatus the last couple months. We got super busy. You may have seen on our social media that we were the #1 team at Remax Metro for the month of August. It was also one of the biggest quarters of my career, and it was the second biggest quarter of our year. So we're having a great year as a team, even in this difficult market, which I'll get into in a second. But I just want to briefly talk about what Real Talk is going to look like in the future. So below, everything's going to look pretty much the same. You'll see articles, uh, local articles about what's going on in our community, our 2 cents on them, and some information on what's going on in the food and beverage scene here in St. Pete and around Tampa Bay, and then usually a featured property and maybe a helpful hint. The other thing is this is Real Talk, which is our quasi blog that we run to tell you about what's going on with us and the market, more importantly. So it's going to revert back to a written form, which some of our OG subscribers may remember. That started as a written form, moved to video, and so we're going to have a blended version. So the first quarter of every month, I'll get it on here and talk to you about what's going on in the market. Kind of give you a recap of the last market, give you a little bit of insight into maybe what we'll see in the next quarter. And then in between each month, we'll just do a small written blog, just kind of keep you up to date on what's going on and fill in the blanks, but really quarterly updates on what's going on in the market. So without further ado, let's talk about the market. I think in the residential world and probably just overall real estate, commercial, residential, everything is about two words: inventory and interest rates. Anyone who's been looking for a home or even has been shopping around for maybe a car, you've noticed interest rates are really high right now. They're the highest they've been in 23 years. Mortgage applications for new mortgages are down since this is the lowest it's been since 1995. So, you have to go back, 20 to 30 years to see some of the lows we're seeing currently in the real estate market. 2008, a lot of people are comparing this to 2008, and I think that is an interesting comparison just because statistically, the number of sales that are happening this year are similar to what happened in 2008. It's actually lower this year. We're probably going to be about 4 million sales by the end of the year. Right now, we're at 3 and change. If you look back just a year or two ago, that number was considerably higher. So the number of sales, this is nationally, not locally, have fallen off substantially. Locally, we've actually done a lot better. As a lot of people know, Florida had a lot of people moving here during and right after the COVID-19 pandemic. So we've had an influx of population growth, and demographic changes is one of the #1 drivers of both commercial and residential real estate. And so we've had the benefit of having a lot of people move here, which has helped give us a lot of support. If you look at our statistics versus the national averages, it's pretty stark. We've really held up well comparatively to what most of the country is feeling right now. That doesn't mean there isn't pain, but just, to talk about interest rates, we're at 8% right now. Some people have been paying 8% or getting into 8% mortgages for a little while. And some people are still able to get in the mid to high sevens, but still, that's still very high. Again, historically, for the recent history, last 20, 25 years, what a lot of people expected was those lower rates to continue. And what studies have found that about 5.5% nationally is about where buyers start to move. Locally, because our market's a little different, I think that's probably a little low. I think our market is probably about 6.5%. I think that is the mortgage rate that jumps people into the market and gets people moving again. It'll be interesting to see how the rest of the year plays out. But overall, we're basically back to where we were pre-pandemic in terms of a lot of our statistics. Inventory is still, based on inventory alone, we're still in a seller's market. Inventory in terms of the months of supply we have left, whether you're looking at single family homes or condos, it's right around the 2 to 3 month mark, with 6 months being an equilibrium, a balance. And so we're still heavily in a seller's market in that respect. very limited inventory, which is why it's not unusual to have bidding wars in residential properties, or to have, maybe less options, or you're still paying a higher price. And that's why prices are continuing to rise. We see almost month after month, but certainly quarter after quarter, we're seeing prices continue to rise. And that's due to the lack of inventory. And that's, drives affordability, right? Low inventory plus high interest rates equal horrible affordability. I mean, it's the worst affordability we've seen in 25, 30 years, maybe longer. It's bad for the buyer, particularly first-time home buyers. So first-time home buyers typically make up about 40% of our market, or a buyer market. Right now, they're about 27%. First-time home buyers are the ones that are paying the price. What we're telling a lot of our clients, particularly buyers and first-time buyers, let's look at some new construction homes, particularly in the new construction communities that are happening not in St. Pete, but around St. Pete. So think Palmetto and Parrish. Lakewood Ranch a little bit, Bradenton a little bit, Riverview a little bit as well. We really like Parrish and Palmetto because they're relatively close to St. Pete. It's pretty much a straight shot, and those are up and coming areas that aren't as fully built out, but they still have some new construction communities where they're offering really nice incentives. The number one incentive right now is a buy down to the mortgage rate. So you can lock into a mortgage rate that is several points below where the current mortgage interest rates are, and that can benefit you for the full course of the mortgage, so 20 to 30 years. Commercial is really interesting right now. There's a few other dynamics. Interest rates, I think, is the biggest story in commercial. That and I think credit, right? It's inventory is still part of the problem. There's very little inventory. I think we're starting to see a little bit of a increase in inventory. We're seeing leasing activity slow down on both office and residential, which is mostly our focus. We do a little bit of industrial and multifamily as well, but most of our focus is retail. But you're seeing, retail and office, and we're seeing that slow down in terms of leasing and absorption rate of leases and square footage. When you're looking at sales, our sales have slowed down, but again, that goes back to interest rates being as high as they are. And then in, commercial, between interest rates and then the regional bank crisis that we had earlier this year, while you're not seeing bank failures anymore and there's no, alarm bells, we're still experiencing the after effect of those failures and the tightening of credit. Credit continues to tighten for borrowers. Lenders are getting stricter and stricter. So interest rates and then credit availability and medium banks and how they've been affected, really affecting commercial. And then the other big I word, so you've got interest rates, inventory, and the other big I word that has affected both residential and commercial here in Florida and in our market is insurance. Florida is in an insurance crisis right now. And it's important that people understand insurance rates are going up at an unsustainable level. From a commercial perspective, we do a lot of property management. I'm also on the board of a condo building here in St. Pete. I can tell you from what I've seen and what I've heard talking to my colleagues and peers, people are seeing 50 to 120% annual increases on commercial insurance. Luckily, residential isn't quite that bad, but it's pretty close. And it's getting that's the other piece of the affordability puzzle here in St. Pete, Pinellas, Florida. It's harder, right, for developments, commercial developers to build properties when you have high insurance, high interest, and then high land costs, as well as high labor, and then a lack of credit availability, which is affecting not just small mom and pop investors, like us and our sister company Blackacre, but it's also affecting the large operators. And so you're going to see, we have seen a slowdown in new constructions, new permits, and we expect to see that continue, but that'll cause a future lack of inventory and supply, which will cause prices to go up. Interest rates eventually will probably come down. Again, those are based on the interest on the 10-year treasury and what's happening in the economy. If you ever have a question about what's going on in our market, give Matt or I a call. Matt and I are on our phones pretty much all day, every day. You can reach me at 727-748-7113. That's my cell phone. Text me or call me anytime. Happy to chat with you about what's going on in our market, talk to you about your specific situation, because I think that's the other piece here is that everyone's situation is different. We're currently in the process of helping a couple of commercial sellers, and their specific situations lend to selling right now. Sometimes people have to sell. Sometimes it's just good timing for their personal business to sell. We've also worked this year with some residential buyers and sellers who were selling one property and buying another, but were able to use cash on the purchase. So if you're not having to play the mortgage rate game and you have cash, that changes the dynamic quite a bit. If you're a cash buyer right now, it's actually even though inventory is low, it's still a decent time because interest rates are so high. Again, it's harder for buyers to buy. Sales are down. Absorption rate is down. And so if you're a buyer, an opportunistic buyer who has cash sitting on the sidelines, you can potentially be competitive right now to go in and potentially get a good deal on a property. It's more so true on residential than commercial. Commercial has a few different dynamics at play. We expect to see more commercial deals in the near future. And those will probably be more investment deals on the B minus to, let's say, D class properties. So the lower end, the higher end properties, the A and Bs probably won't be as affected. But there certainly will be deals. We're seeing cap rate expansion, but just slightly, and it depends where, right? Downtown core of St. Pete, we're not really seeing that as much. Cap rates have been fairly static, and in some cases, depending on the asset class, are compressing still. Versus you go to North Pinellas, where we just analyzed a property, cap rates have expanded. And overall in Pinellas, commercial rent growth and residential rent growth is still going to grow, but it's going to be growing much slower. And depending on which economist you believe, it could be slowing considerably below inflation. So there's a lot of things to watch in the market. Obviously, what's happening in our world right now has everyone's attention, and for good reason. Our hearts and prayers are with the Israeli and Palestinian people while the war plays out there, and as well as the war in Ukraine. And we pray and keep in our thoughts and prayers the people of Ukraine. But there's a lot of international conflict, China, Iran, Russia. There's just so much going on in the world. The Fed is potentially going to be raising our interest rates again, which plays more directly into that economic conversation we were having. The economy has very mixed signals, like we've talked about before. Some parts of the economy, like employment, look really good. Wage growth looks actually fairly strong. But you look at some other factors, whether it's real estate, some of these, tech sectors are, I think, struggling right now. New startup companies are really struggling right now. Any company that is relying on raising capital or borrowing debt or getting credit to run their business are going to be struggling right now. We saw a great company here in Florida, Molecule. They do home air filtration, file for bankruptcy. And so, that was a sign we probably will see more of. Our general house view is that it's going to get worse before it gets better. And that means there's going to be opportunities in the near and relatively near future, particularly in commercial, and as we talk about in the future. But we're pretty bullish overall on St. Pete, Pinellas, and Florida. And we think our market's going to be fairly resilient. And going back to that demographic piece, again, population and demographic trends have such a huge impact on values of commercial real estate and residential real estate, and so real estate in general. So if we're talking about population, Florida's population between 2020 and 2020, the beginning of 2020, the end of 2022, so a 2-year period, not counting this year, 2023, Florida saw a population growth that was 5 times the national average. And so a lot of people were moving here. And not to say people didn't leave, but we had far more people coming in. And if you look at where people are moving in Florida, not everywhere is equally gaining population, but the Tampa Bay market, Pinellas, Hillsborough, is rapidly growing. And we've seen that here locally too. Like if you're in St. Pete, you have seen over the last 3 to 5 years, home prices change, particularly in neighborhoods that you may have thought, oh, that's a not so great neighborhood, that's on the bubble, it's up and coming, and you've seen some of those neighborhoods really explode. Again, lack of inventory and a surge of demand due to demographic changes fueled by the pandemic. So again, call us if you have any questions about your specific situation or the market as a whole. We'd love to chat with you, give you more information, make a presentation on your situation. We remember, we're the Spitzer Rutland team, and we do it all. Sales, leasing, property management, residential, commercial, we do it all. We have a team of 3 guys, myself, Jason Spitzer, Matt Lanny, who's our residential specialist, and then Tom, who's our wonderful director of operations, administration, and marketing, and he kind of runs the show behind the scenes. So we'd love to help you with any of your real estate needs, and we understand that you may not be ready today, but it's always good to get ahead of the curve. And give you one quick example before we hop off today. I had someone recently reach out to me about selling a property, and it was a unique situation where they were retiring and were deciding to sell their business. They also own the real estate. Well, they sold the business, and then they gave the new tenant a lease. Unfortunately, they didn't involve any kind of real estate professional when they negotiated that lease. And so the lease they negotiated was less than ideal. And so it started below market rate, and it had a long term, effectively a very long term that never reset to market. And also the way the costs were divvied up between the landlord and the tenant, and the way the costs were paid were a little outside the standard and benefited the tenant over the landlord. And so the client came to us looking to sell this property, but with a long-term lease, that property is not an owner primary user occupancy. So not another business could move in there that wants to buy it and move their own business in. It's got to be an investor who's looking for cash flow, or who needs a 1031 exchange, who has a tight timeline and has to buy something. It's kind of a perfect property for those people. But because of the lease itself, it actually hurt the value pretty substantially. And the difference in value between what they did, their lease, and let's say a market standard lease, was a non-negligible amount of money. But the difference between selling it vacant and selling it with the lease was a huge difference. Now, they sold their business and made money off that sale. So you have to factor that in the total picture. And we're not accountants, but that's something they could have talked to their accountant about and given some scenarios of, well, what if I did this option versus this option? What are the tax implications? And maybe there was a way to unwind that business in a different way that was more advantageous to them in terms of their wealth. So I would say get us involved, real estate professionals, early and often, because we can save you a lot. And that's just one example, but I can give you countless examples. And it happens all the time where people bring us into the picture a little too late, and they've already done something that is, in commercial real estate, leases with options can be 20 plus years. And so if you've locked into a 20 plus year lease, you're stuck with that. There's some ways to get out of it, but for the most part, you're probably stuck. And so that can be a life-changing decision in terms of the value, and also in terms of how you plan for retirement, your tax planning, and then also timing, right? It may affect the timing of your sale, the value of your sale. So I always encourage people to reach out to us and just have a conversation. We can give you a pretty quick assessment or decide, or let you know if maybe more conversations are needed. We also have a ton of resources. We know a lot of people. We have a huge network in Tampa Bay. We know just about every kind of tradesperson you could need, lenders, specialty lenders, contractors, anything you need. We probably not only know someone, but are friends with someone that does it, because we do that much business here between property management, sales, and leasing. We deal with contractors, subcontractors, attorneys, insurance agents, mortgage brokers, banks. We deal with them all on a regular basis. We just have a huge network and Rolodex to help you, our clients, in achieving your real estate dreams and successes. So if you have anything, please reach out. SpitzerRutland.com. Hope you enjoy the newsletter. Have a great rest of October and get ready for the holidays, and happy Halloween.